So the other day I was watching a YouTube trading channel where the guy was suggesting that all you need to trade successfully is a superficial understanding of candlesticks and a simple moving average plotted on the chart. I guess if it were that simple, we would see a lot of 20-year-old millionaires walking around, but that's not what we see. What I see are thousands of beginners embarking on the wrong bus as far as trading goes. I also see a lot of people wanting to believe a certain narrative about trading that is just not true. The reality is that trading is hard, and there is a lot to learn and practice. This channel has always been about telling traders what they need to hear instead of what they want to hear. One of the motivations behind this channel is alerting people about the danger of pushing certain utopic ideas forward, and the reason is because I know where the story ends. I have people close to me on a personal level that have taken this illusion of trading to the limit, and trust me, you don't want that in your life. My channel attracts a certain kind of audience that is more advanced, and I'm glad to see there is a community of very good traders forming around here. But you also have to help me getting this message across to the people who need good information the most, which are the new traders who are being misled by people that are trying to make an easy profit by selling empty promises. So please, just click the like button, subscribe to the channel, and stick around until the end of the video because that tells the YouTube algorithm that this video is relevant and then a broader audience can see it. By the way, thank you very much to everyone that gave me comprehensive feedback in my latest post. In today's video, I want to change things a little bit and show a bar-by-bar analysis of a simple reversal. It's sometimes useful to take a closer look at price action to see all the details in there. I will look at the market in terms of raw price action, simple volume analysis, and simple momentum analysis also. Even though raw price action is probably the best source of information, there are certain things that volume and momentum can tell us that cannot be derived from raw price. The first thing that catches my attention in this piece of price action is the power of sellers on the way down when we look at raw price. There's sort of a cascading effect going on where each candle is bigger than the last, meaning that sellers are just unloading their power into this move. In terms of momentum, we don't see anything different. The RSI is just going down normally as it would when it's converging with price action. In terms of volume, however, we already see an early indication that this is not exactly what it looks like. Observe how there is a volume spike at the beginning of this price movement, and then as price goes lower, the volume does not increase above that last volume spike. If you remember the simple tenet of Dow theory that volume confirms price action, you realize the problem here. On the way down, lower lows are confirmed when there are higher highs in volume, and here we see a lower high. Another way of looking at this is that we are already seeing a volume divergence here. The significance of this is that even though the raw price action makes it seem like sellers are powerful, the volume behind this movement is not proportional to what it looks like. Going to the right a little bit, we see that sellers take a break, and then buyers are able to create three small bullish candlesticks that fit inside the range of the last bearish candlestick. Sellers then proceed to take action again, and they create another lower low in one candlestick. However, now we see a volume divergence once again because price is making a lower low and volume is making a lower high. Again, for this down movement to be confirmed, we should see a higher amount of volume in comparison to the last low. The volume divergence means that this second leg down is weak. There isn't enough volume to sustain it. Now the RSI is also showing divergence. We see a simple bullish reversal divergence happening in there since we have a lower low in price action and a higher low in the RSI. Advancing price action one candle to the right, we see something interesting. We see a medium-sized bullish candle closing in its upper range, and we see that it has a larger volume than the last bearish candlestick, which was supposed to confirm the existence of sellers. That's an indication that buyers are gaining control and price is reversing direction. The bullish candle also breaks the small high that was created when those three small bullish candles were formed. That's sometimes enough for a subtle reversal, and then you may ask yourself how you can possibly take advantage of this. We can, for example, draw a simple standard pitchfork on the highs and lows that we have, remembering that we need alternating highs and lows to draw pitchforks correctly. The moment we plot the pitchfork, we can already see that price is overextending the upper line of the pitchfork. We have two possibilities here. We either adjust the entire pitchfork to the new price frequency, or we can draw sliding lines. Both possibilities yield the same result. I will go for the first one for simplicity's sake. Notice that now the pitchfork is adjusted to the frequency of price. Let's advance price bar by bar to watch carefully what happens. In the next candle, we see that the new frequency shift is being respected. There is the formation of a fractal candle, which in this case is meaningless. There is no ground to support a short trade idea at this time. In the next candle, we see an inside formation with a small body and small volume also, still within the frequency shifted pitchfork. At this point, we can draw another pitchfork with the potential highs and lows of the moment, as you can see in this other image. By advancing to the next candle, we see something interesting. As soon as price gets near the center line of the black downsloping pitchfork and the lower line of the blue frequency shifted upsloping pitchfork, an outside candle that is also a fractal candle appears. By advancing price, we can see that this is indeed the point from which price sets off to the upside. Notice how there is a second chance to get in this trade once price begins to form higher highs in the minor flow. The candle with the large lower shadow comes back down to test the lower line of the frequency shifted pitchfork and the outside of the upper line of the downsloping pitchfork. It also tests the inward frequency that is now one of the limits of the demand zone in the minor flow. That's it for this video. If you wish to learn more about how to trade using these techniques, please check my premium courses in the video description. Don't forget also to support the channel by clicking the like button, subscribing to the channel, activating the notifications button, sharing the video with your fellow traders, and leaving your feedback below in the comment section. Thank you very much for watching, and I hope to see you in the next videos. Take care.